Welcome to Speidel's California Minute. I'm your host, Catherine Zidane, and this week we're covering the pass-through entity tax election and how to make the election on a superseding return. We have a 2-hour on-demand webinar on California's pass-through entity elective tax that includes the latest developments on the tax and the credit. Plus, you'll learn about the tax benefits of the election, who can and cannot make the election, and more. You can sign up at caltax.com under webinars. According to the FTB, taxpayers that failed to make a pass-through entity tax election can make the election on a superseding return. But the FTB's definition of a superseding return is much more restrictive than what many tax professionals understand it to be. A taxpayer can only make a pass-through entity tax election on an original, timely filed return. Once the election is made, it's irrevocable, and a taxpayer cannot make or revoke the election on an amended return. However, the FTB has informed us that a taxpayer that failed to make the election on their first return can make the election on a second superseding return. Unfortunately, the FTB's definition of a superseding return is much narrower than many understand the term to mean. Many tax professionals, as well as the IRS, define a superseding return to mean a return filed subsequent to an originally filed return, and that's filed within the filing period, including extensions. The FTB has stated that a second return for a pass-through entity is only a superseding return if both the first and second returns were filed prior to the original due date of the return, which is March 15th for calendar year taxpayers, or after the original due date but by the extended due date, which is September 15th or October 15th for calendar year taxpayers. But a second return filed during the extension period is not considered a superseding return if the first return was filed prior to the original due date of the return. According to the FTB, in this scenario, the second return would be considered an amended return. The FTB has acknowledged the confusion in this area and has stated that they'll be issuing additional information on the meaning of a superseding return for California tax purposes. The good news for most pass-through entities filing California returns for the 2022 tax year is that the original due date of the return has been postponed to October 16, 2023, due to the storm-related postponements granted by the IRS and the FTB. This means that a second return filed by a postponement-eligible taxpayer by the October 16th due date will be considered a superseding return and not an amended return. Therefore, if a pass-through entity eligible for postponement relief fails to make the election on their original timely filed return, they'll be able to make the election on a superseding return filed by October 16th, regardless of when the first return was filed. We'll cover any update on this issue in Speidel's California Tax Letter. For details on this monthly publication that covers all things state tax related, go to caltax.com and click Publications. That's all for this week. Join us next time for another episode of Speidel's California Minute.